Question?
Yes, the Honourable Leader of the Opposition.
Thank you, Madam Speaker. Madam Speaker, I've given notice of the following private notice question addressed to Dr. the Honourable Prime Minister, Minister of Defence, Home Affairs and External Communications, Minister of Finance, Minister for Rodrigues and Outer Islands. Whether in regard to the decision taken by the Monetary Policy Committee of the Bank of Mauritius on 4th February 2025 to review the key rate by 50 basis points from 4% to 4.5% per annum, he will state if government has carried out an impact assessment of the spillover effects thereof across different sectors of the economy.
Yes, Honourable Prime Minister.
Yes, Madam Speaker. First of all, let me stress to the Leader of the Opposition that we have restored the independence of the Bank of Mauritius, as it should be. However, in view of the importance of this issue, I seek the indulgence, Madam Speaker, your indulgence, and that of the House for a comprehensive reply. Madam Speaker, I am informed that the Monetary Policy Committee had already weighed the impact of its policy decision on the various stakeholders and chosen to act in the best interest of the economy. This is in line, Madam Speaker, with the statutory requirement for the MPC to formulate and determine monetary policy in order to maintain, one, they have to maintain, this is objective, price stability, and taking into account that they must balance the economic development of Mauritius. These are the two objectives that they have, the central bank has. I would also like to quote Section 55(3) of the Bank of Mauritius Act, which emphasizes the independence of the Monetary Policy Committee and states that, and I quote, in the discharge of its functions, the committee shall not be subject to the direction or control of any other person or authority. We in this government take this commitment very seriously and believe in the independence of the central bank because it is for the benefit of the economy and society at large. However, the same cannot be said of how decisions have been taken during the past 10 years, I should say. As it is widely recognized that an independent central bank is fundamental. It is a fundamental building block in an economy to fight inflation and to promote conditions for stable, long-term economic growth. The Bank of Mauritius has acted independently and within the parameters of its mandate after taking into consideration in-house expert analysis and assessing the implications on the economy at large. I must underscore, Madam Speaker, the fact that under the previous government, decisions taken by the MPC were politicized, with directives coming outside the Bank of Mauritius. Many expert decisions were completely disregarded for sheer political motivations. Let me illustrate this, Madam Speaker. In September 2024, MPC meeting was organized at a very short notice, on an overnight basis following the policy decision of the United States Fed. The experts in modeling and forecasting, they have experts for the information of the Leader of the They have experts who do modeling, who do forecasting. The experts in modeling and forecasting at the Bank of Mauritius proposed a rise in the key rate given that inflation forecast was still above the midpoint of 3.5% for the medium term. And the interest differential, which is very important, between the US dollar and the Mauritian rupee was unfavorably high. This is why they proposed a rise in the key repo rate. I would like to inform the House that this macroeconomic forecasting model has been developed with the support of the IMF for the use in the Mauritian context. Taking the right, but they didn't do this, they went the other way around. Taking the right decisions in line with this expert judgment would have avoided adjustments that have now to be implemented, and to the scale that are currently being seen, since this has contributed to narrowing the interest rate differentials with the US dollar significantly and assisted in containing the depreciation of the rupee. While the experts advocated for an increase in the key repo rate, which at the time was at 4.50%, the decision was then taken, contrary to what the experts' advice had been given, was a reduction in the key rate to 4%, that is, from 4.50%. The situation was dire when the government took office in November 2024. Growth data and other statistics had been doctored to show a falsely bright picture, as shown in the State of the Economy report. I won't go into the State of the Economy report. I want to stick to the answering that question. The previous government relied excessively on money printing to finance the budget deficit. The Bank of Mauritius injected a total amount of, believe it or not, 160 billion rupees. They injected that liquidity into the banking system to fund government spending and to finance the famous Mauritius Investment Corporation. This created a situation of massive excess liquidity that in turn contributed to high levels of inflation that the country experienced and to significantly depreciate the rupee. This excess liquidity was at an all-time high of around 90 billion rupees in August 2023, just prior 1 year to the election. The inflation rate reached a peak of 11.3% in February of 2023, while the rupee depreciated by 46% against the US dollar between the end of December 2014 and November 2024, which is on a cumulative basis, inflation increased by 46.5%. Madam Speaker, these developments severely reduce the purchasing power of the population. The flawed economic model based on excessive consumption and which resulted in much higher imports while exports dwindled. The trade deficit was at a high of 163 billion rupees, that is 25.4% of GDP in 2023, and is estimated to be even higher at around 182 billion or 26.1% of GDP in 2024. The massive amount of excess liquidity in the system and the very accommodative monetary policy stance of the Bank of Mauritius led to the wide interest rate differentials between instruments denominated in rupees and those denominated in US dollars. Lower returns coming from the domestic market, money market, as the result of the massive excess liquidity have over the past years contributed to negative interest rate differentials with currencies such as the US dollar. And this has led to the weakening of the rupee. The result of this mismanagement of the excess liquidity situation was an erosion of the purchasing power of our citizens through inflationary pressures. These negative differentials are even higher when you adjust them for exchange rate effects. It was therefore crucial to ensure that this negative yield differential should be addressed sustainably if we want to contain depreciation of the rupee, the pressures on the rupee, and to restore the purchasing power of Mauritian citizens in line with our electoral promises. Let me list the action that the Bank of Mauritius has taken since the new management has taken office as from mid-November 2024 to improve conditions on the domestic foreign exchange market. The new management team acted swiftly to correct several dysfunctions that they observed in the forex market by addressing loopholes that were maintaining a depreciation bias and a shortage of foreign currencies in the market. Secondly, the bank is monitoring the rates at which forward transactions are being conducted and will take regulatory action against any bank distorting prices in the forward market. Third, the bank has engaged with other institutions to manage and curtail any potential regulatory arbitrage. Fourth, the bank exercises vigilance with regard to foreign currency transactions taking place between banks, customers, and foreign forex brokers and conducts enhanced due diligence on intercompany buying and selling of foreign currencies, as well as what we call swaps and derivatives. As every member of the public now already knows, the dates of all the MPC meetings are already known for 2025. There will be no overnight call for the MPC to do what they did in the past. This marks a significant departure, as I say, from what the previous regime did in total opacity. It is important to note, Madam Speaker, as the result of the removal of these dysfunctions, that the rupee has stabilized even before the last MPC meeting. It has started stabilizing. I must assert that since this government has assumed office in November 2024, I have ensured that there is no political interference in the operations of public institutions and in policy decisions of these bodies. The MPC, as I said, Madam Speaker, is fully independent, and MPC members have to adhere to a code of conduct, which includes a number of criteria, including independence and confidentiality. The decision-making process of the newly formed MPC at its first meeting, that is in February, was taken independently after diligently appraising the developments in the macroeconomic field and financial markets, and after balancing the risk to inflation and growth. Let me also share with you, Madam Speaker, that the MPC assesses the various implications of an interest rate change when formulating monetary policy. The implications of interest rate changes on the financial system, the household sector, and the corporate sector were considered and discussed by the MPC, I'm told, when it decided to raise the key rate on 4th of February of this year. The focus of the MPC remained on lowering inflation, achieving price stability, and exchange rate stability. The analyses conducted by the Bank of Mauritius on a hike in interest rate have confirmed the resilience of the financial system, as well as all the household and corporate sectors, to the hike in the policy interest rate. The household sector is not expected to be under any strain following this rise in the interest rate. The ratio of household debt servicing to GDP is expected to continue to hover around 6%. The rise in nominal income of households will cushion the recent increase in interest rates and maintain the debt servicing capacity. Most of this information that I'm sharing with the House is already in the public domain. The minutes are already published on the bank's website. After deliberations on the rationale and implications of increasing the interest rate, I am told the MPC carefully balanced the risk to the inflation and the growth outlooks and unanimously decided that due to the buildup of distortions in the money and foreign exchange markets, as a result of implementing inappropriate decisions under the previous government, a bold policy response was absolutely necessary. Given that inflation risk was set to be on the upside, the MPC decided that it was crucial to ensure that the inflationary expectations remain contained. The expectations are very often more important than what the inflation rate actually is. In line with the bank's price stability mandate, so they decided they will enhance the purchasing power of citizens and this will allow borrowers to better service the debt. This would help achieve the following objectives, namely, lower excess liquidity, reverse the negative interest rate differential with the US dollars, mitigate exchange rate pressures, contain inflationary pressures, and encourage savings. Madam Speaker, I must state that we're already seeing some tangible effects on both the value of the rupee and inflation, as follows. On the value of the rupee, between the 3rd of January 2024 to the 15th of November 2024, the rupee depreciated by 6.8% against the US dollars, by 3.2% against the euro, and 7.3% against the British pound. Between the 18th of November and today, that is 21st of February, the rupee has actually appreciated by 0.6% against the US dollars, by 1.3% against euro, and by 0.9% against the British pound. And lastly, since the beginning of the year, the rupee has appreciated by 2.8% against the US dollars, by 0.6% against the euro, and 0.9% against the British pound. B, on a year-to-year inflation, it has been declining since November 2024 from 3.4% to 1.9% in January of 2025. We expect, Madam Speaker, inflation to come down as the depreciation of the rupee is contained. Madam Speaker, we took a commitment to protect the purchasing power of the people of this country by containing first inflation and secondly by stabilizing the rupee. After 3 years, we have started to see some early results. Thank you.
Thank you. Yes, Honourable Leader of the Opposition.
Thank you, Madam Speaker. In his reply, the Prime Minister has stated that with regard to the household sector, there will be no impact as such. But, Madam Speaker, we all know that by the end of this month, those who have housing loans will have to pay more. And on the other side, Madam Speaker, we also know that commercial banks are making a lot of profits.
You're supposed to ask a question.
Yeah, I'm going to ask the question. Will the government intervene and consider negotiating with the Mauritius Bankers Association to keep the interest rate on loans unchanged, at least for this year, with the objective, Madam Speaker, to ensure a seamless debt financing and at the same time protect the livelihood of the population?
As I said, Madam Speaker, the Leader of the Opposition perhaps missed it. I did say that they have experts, that they look at all the consequences, but they have to look at the public interest. And the interest of the country is the economy. We have to ensure that inflation is brought down, that the rupee, the depreciation stops, and that the marginal differences are reduced between the two currencies. So they take all this into consideration. I did say also that on the housing sector, we believe there will not be any adverse effects. I should add to tell the Leader of the Opposition, he seems to forget, at one point you did increase the interest rate. Not at one point, I think at twice or 3 times. And of course, everybody who has a loan has to pay more if the interest goes up. This is known, but you can't have your cake and eat it at the same time.
Madam Speaker, I've put that question, but let me give an example so that the House understands what I'm stating.
Put a question.
Yeah,
Your
but
example will
let
be
me
in the
give the
question.
example and then
All
I'll
right.
put the question.
All right.
For example, Madam Speaker, a family who has a housing loan of 5 million rupees, let's say payable over a period of 20 years, at the end of this month, there will be an increase of 1,427 rupees on their housing loan. Honourable Prime Minister, you will agree that this represents quite an amount. This is why I put this question, Madam Speaker. We are aware, Madam Speaker, and I believe the Prime Minister is also aware of that, there is a housing loan relief scheme. That scheme was introduced in 2023 and 2024 and then extended to June 2025. Now, that scheme was introduced in order to help those households. Can government consider, first of all, increasing that housing loan relief scheme by 500 rupees, at least to meet? I've given an example that 1,427 rupees for a loan of 5 million rupees, and give also due consideration for extending it for a period of 1 year, in order to alleviate the burden of those families, Madam Speaker.
The Leader of the Opposition forgets that they were in government, they never alleviated anything when they increased the rate. But let me say something else. This is what I call money illusion. If you increase wages, you keep giving subsidies left, right, and center, of course, you will end up with a problem that we have ended up. You have to stop the rot. This is what we're doing. We have to put order in the economy. In the long run, everybody will benefit. But in the short run, this is what we inherited. We have to take some action. As I say again, we have to control inflation and we have to contain the depreciation of the rupee. Now, we cannot do this on one side and then keep doing other things on the other side. As the leader of the opposition knows, when he mentioned it many times, we gave the 14-month salary to over 90% of the people. This was a difficult decision because there was no money. Moody's was watching us. They're still looking at us. They said they will monitor us for the next 18 months. So we have to make a decision. We try to relieve as we can. But this is what is the actual situation. And as I say, in the bank, they looked at all these before coming to the conclusion that they did.
The Honourable Prime Minister mentioned the 14-month bonus. Let me come to another sector, that is the SME sector, Madam Speaker, which employs about 64.2 of workers in this country and contribute to nearly 40% of GDP. Now, I understand, Madam Speaker, that many SMEs have not received their allocation from the MRA to be able to pay the 14-month bonus. And we all know, Madam Speaker, that most of those SMEs have loans from banking institutions, and they will be hit by this increase in the key rate. Can the Honourable Prime Minister inform the House of measures, if any, being taken by government to ease the financial burden of those SMEs following the increase in the key rate?
This doesn't pertain to the question, but let me just remind him. We have been saying, what are you doing for the SMEs when you were in government? They turned a deaf ear completely. Wait for the budget and you'll see.
Madam Speaker, may I take a point of order? There is an honourable member who is speaking behind my back from a sitting position.
Members will have to behave as far as possible.
But he has two items.
Don't let's waste time. Honourable members, please. I'm not yet deaf, but I didn't hear. Come to your last, maybe last, I don't know, you've got a few more minutes. But the question must be on the repo rate, as much as possible. Yeah.
Madam Speaker, the Honourable Prime Minister may be aware that several banks around the world, and to mention a few, the Bank of England, the Reserve Bank of India, the European Central Bank, the Bank of Sweden, the Central Bank of Canada.
I'm sorry.
Have all this, this is in relation to the question, Madam Speaker.
You haven't even let me say what I have to say. Put the question and then you do the opposite. You do the opposite. Put your question and then you can qualify your question. Please. Please.
Madam Speaker, it is related to my PNQ because all those banks that I've mentioned, they have decided to cut down the key rate. Does the government believe that it would have been wiser in those time of global uncertainties to maintain the same repo rate?
The leader of the opposition is comparing now economy of Mauritius, which has been bankrupted, with other economies which have taken the measures that they had to take. This is different. You can't compare Britain, France with Mauritius. Here we have had a government which has destroyed the state of the economy, destroyed, manipulated figures. We have to deal with it. We are having to deal with this now. This is what I need to say to the leader of the opposition.
One maybe you let
Thank you, Madam Speaker.
Honourable Fourth Member.
Yes, the Prime Minister, can the Prime Minister tell us with regards to the repo rate being increased, of course, it will have an incidence, obviously, on prices in general, across the board. Now, the price stabilization account, which has been promised as the first, in fact, the most important promise of l'Alliance du Changement was in fact for the purpose of really alleviating purchasing power of low-income families who are going to be impacted by this. Should we now, can the Prime Minister tell us whether this 10 billion price stabilization account which has been promised is still on the table?
The question was on the Bank of Mauritius. Now you come.
I'm sure you would like to reply to that.
Yeah, I can reply to that, but it's outside the question. First of all, let me say something. There is an illusion here. You don't seem to realize what the previous government has done with the economy. We have to take corrective actions. We cannot say, well, let's do as we did before. If we do that, we'll end up what Greece happened, what Greece came. I'm sorry? But this is what we have to
interrupting
do.
the Prime
We have
Minister,
to act
Honourable
responsibly. We cannot act like the previous government did.
Exactly. Bravo.
Last question.
Yes,
I'm
Madam
looking at the time.
Speaker. Again, with regard to the SMEs, I think we all agree that they are facing a difficult situation. At least government should come forward with accompanying measures for that sector. Otherwise, they will lay off workers, Madam Speaker.
I'm surprised.
I understand very well that issue. Maybe you can come with a proper question next time. Not on this question. I think time is up now, so we will move to the next item on our agenda.